but also giving them, terms that they want so you can provide them with the treatment that they want. And this is going to, as Peggy mentioned, this is going to be a very quick, informative webinar. We're going to share some consumer market research that we performed. We're going to go through what we do and how we do it. We're going to go through the costs. We're going to share with you a case study. And the benefit of being at the end of the webinar will be, an open kind of Q&A to see if you have any questions, and we'll address those. So we'll go ahead and get started and get right into it. And so, all of us on this call, we all know that, we've got a certain number of our patients who pay cash. We've got a growing number of patients who have dental insurance, but the dental insurance benefits aren't increasing along with everything else. They're pretty much around $1,500 maximum for people, which is usually a fraction of the cost of the care that people actually need done. But, is it really about the cost of dentistry that's an issue for people, or is it about fitting it into their budget, right? So let's take a look at some of the research that we've performed. So if you look at this is a map of the average household income in the United States. So if you look at this, the average household income in the United States, according to the U.S. Census Bureau, the U.S. Bureau of Labor Statistics, is $53,000. The average bank account balance of the average consumer is $4,400, which is the highest ever. Actually, over the last 25 years, the average bank account balance has only been around $2,200. So, you think about it, treatment can cost more than what most consumers have in their bank account. You look at the average fee of a 6-month Smiles case is probably $4,500 to $5,500. And we've kind of heard different things based upon where you're at in the country. But, if you take a look at the map and the different colors on the map, the purple here, or violet, whatever color that that's showing basically consumers that have household income of $70,000 or more. But when we look at the map, again, most of the country is blue, so it's around $45,000 to $60,000 a year household income-wise, right? So again, we have to take these things in consideration whenever, we're seeing patients and treating them, and, not to do a wallet biopsy and think that, just because they can't afford it doesn't mean they really can't afford it necessarily, right? So now, in addition to the money part, so we addressed somewhat of the cost issue, but now, well, we got financing, right? We've all been using the no interest for 6 and 12-month options, which those are deferred interest options. Those aren't truly no interest. I mean, at the end of the 6 or 12-month or 18-month deferred interest period, that interest rate goes to 26.9 or 29.9%. And how is it really different than any other credit card? I mean, you can go online and apply for a Visa or American Express, and I can get no interest for 18 months, and I can get points. And if I use it in your practice, you only get hit for a 2 or 3% credit card fee versus a 10 or 15% discount. But we look at this, the credit scores by age group, and the highest demand. I know we were meeting with the director of sales and marketing for 6-month Smiles and said, most of consumers that are hitting their website and looking and kind of browsing around and looking into 6-month Smiles or are really interested in it are usually in these age groups, right? The late teens, early 20s to early to mid-40s, but the average credit score of those consumers is only around 630. Well, they don't have a chance. The majority of the people in these age groups don't have a chance of qualifying for traditional third-party financing like your deferred interest options, and they're very unlikely to have the cash on hand to be able to pay for something out of pocket. But are people going to tell you these things? No, that's embarrassing. I mean, I'm not going to walk in there and tell you I can't do the 6-month Smiles case because I can't afford it, because I don't have enough money in my bank account, or because I don't think I'm going to qualify for third-party financing that you're trying to pawn off on me. So we've got to take those things into consideration. And it's really not about the cost of things. You think about it, you look at like the brand new iPhone 7. I mean, if you go buy that retail, it's like $1,000. But I'm getting emails where they're telling me I can finance it for as low as $15 or $20 a month, right? So it's not necessarily about the cost of items. It's, because it's going to be expensive no matter what. Our founder, who's actually a very well-known dentist in the profession, he always talks about how his fees have increased over the last 25, 30 years. A crown, when it was $200, it was expensive. When it was $400, it was expensive. When it was $1,000, it was expensive. And $1,200, it's expensive. They don't know what it's supposed to cost. So if the crown is $1,000, or the 6-month Smiles case is $5,000 or $2,500 or $3,000, it doesn't matter. They still think it's expensive, and they're still going to complain about the price. So price is really irrelevant when there's value, okay? And you have a lot of value. Don't discount the value that you provide, because you're providing a lot of value to patients. So here's where we come in, and this is the solution for you. So we are the fastest growing patient finance company in dentistry. A lot of people refer to it as an in-house financing program. Our corporate brand, and many of you on this call may have heard of us before, as Comprehensive Finance, and our consumer brand is Compassionate Finance. So Comprehensive is still the corporate entity that I'm part of or that I work for. But we also, obviously, we have a team of people that work within our consumer division or consumer brand, which is Compassionate Finance. And it was founded in 2010 by an industry-leading expert. It's a very simple chair-side application process. Our customers are telling us that it's easier than any other financing option they have in their practice. We provide end-to-end loan cycle management on the entire loan process. So the consumer or your patient, for example, they think it looks like a bank to them or a finance company, but in reality, you're the one getting that payment every month with interest, and we manage everything. So your team's workload starts and ends at the same places that it does with any other outside finance company. There's not any additional responsibility for them. It's going to increase the cash flow of thousands of dental practices nationwide, or I should say it has. You can earn hundreds to thousands of dollars more versus traditional finance programs. And it's a proven system. And team has literally managed over $130 million in loan contracts for just our dental side of our business alone. And some of our other bigger customers are on the ophthalmology side doing the LASIK surgeries or the hearing aid centers or the aesthetic groups and so on. And we have thousands of dental offices now that are offering CF as their primary financing solution. So I remember when we started the company, or when the company was founded back in 2010 and 11, and even in 2012 and 13, most offices would come to us saying, hey, I want to get my money up front still, but I do acknowledge the fact that I've got cases that are walking out the door, right? Whether it's 6-month smiles or crowns or multiple, restorations, whatever it is, I've got people that are walking out, and I know I could do more comprehensive dentistry or just more cases in general that I'm not getting to do. So I want to use this to tap into that kind of untapped market of dentistry I'm not doing. But then we started getting people to pay. We got many people to pay that no one thought in a million years would qualify for a payment plan, let alone pay it back. And so that instilled a lot of more belief into our system, into our process. And so practices started using it as their only option, right, versus giving up their people with good credit to outside finance companies. Now they're putting all of their patients who need financing into this option. But those practices that we've kind of interviewed and surveyed and have communicated that to us, a lot of them cited that they saw an increase in cash payers once they stopped offering those no interest options. So let's take a look at, Compassionate Finance enables all patients to move forward with treatment, and why practices are moving away from the traditional options to Compassionate Finance. When we take a look at traditional options, what do we know about them? Well, we all know on this call that, about half or less of applicants actually get approved, and that doesn't even take into consideration the large percentage of people who don't even try to qualify because they don't think they will, right? And if people don't think they're going to qualify, they're not even going to try because they don't want to go through the embarrassment. Payment's not affordable for most people. So, you think about it, no interest for 6 or 12 months, that's great, but is that really affordable payments? Or is that just your people that are wealthier, that have the cash and have better credit, taking advantage of your no interest option? Well, you take a 10% discount for doing so. Yeah, you get paid up front, but there's also harsh fees and penalties to the patient if they miss a payment or they still have a balance outside that deferred interest period. And we take a look at Compassionate Finance, the difference. No denials. So literally everyone qualifies as long as they have a checking account in good standing. Personalized terms for any budget. I hate to use the car dealer analogy, but it's very appropriate. I mean, what do? They know you want a car. They know you probably need a car to get back and forth to work and take your family around. And if they know you're not paying cash for it, what's the first question they ask you? What kind of payment are you looking for? If we know patients can't pay cash or they communicate to us that that's not going to be a possibility for them, then we need to kind of figure out what kind of payment would be comfortable for your budget. Let's help you get this care. The practice gets to earn up to 18% interest on your loans too, so anywhere from 0 to 18, and the interest rates are actually set by the office, along with our guidance, obviously. It's going to create consistent cash flow. So why are you giving up 10%? Plus, if you're in PPOs or other things that you're doing where you're discounting your fees, you're going to discount yourself right out of a job or right out of a business. I mean, so this is going to create consistent cash flow. Rather than giving up a 10% discount and getting your money today, get the payment over time with interest, and those payments build up. Whatever you're financing on average every month, let's say before you come to Compassionate Finance, you're financing $10,000 a month on average. But you're giving up $1,000 a month to third-party financing. That's $12,000 a year, right? And there's no other upside there other than I got my money today. But what happens with compassionate finance is if you're financing $10,000 a month, your payments are growing and growing. And within about a year, year and a half, and for some it may be sooner, some it may take longer, depending upon the average term, your monthly payments are going to catch up with what you're financing every month on average. So if you're financing $10,000 a month, within maybe 18 to 24 months, you might have around $10,000 to $15,000, $20,000 in monthly payments coming in, just every single month. So if you want to take off and go on vacation for a month, or spend more time with family and take off several days or even a couple weeks or so out of any given month, you can do so, and you still have consistent cash coming in. And there's also no harsh fees or penalties, so everything is very straightforward. It's a fixed rate, simple interest payment plan or loan contract that the consumer is agreeing to. And let's take a look at that process. So let's say I'm a patient, I want 6-month smiles, but you know what? I'm a recent college grad, I've got a good job, I've got some student loans, I've got a couple little credit cards here and there. Other than that, I really don't have any debt. But you know what? My credit score is only 600. So I can't qualify for your third-party financing options. So you're either going to let me walk out the door, or you're going to say, you know what, Charlie, how about we try compassionate finance? As long as you have a bank account in good standing, you get to request your own monthly payment. We can get you set up on that payment plan that would be comfortable for your budget. Great, let's try it. So when you're logged in, this is kind of the home page or what it would look like. It is 100% online and paperless, so most of our customers are doing it from a tablet, sometimes even chairside. So you'll click New Application. You'll hand it to the patient. They'll fill in the information here, say on like the tablet, for example, very brief, just basic info. And then you'll run their credit. And you can also select the description of goods and services, etc. But you'll run the credit, and within about 3 to 5 seconds, you're going to get back a status here. So you'll notice this came back as approved, and to the right, you'll see a credit rating and a bank rating. So yeah, we're looking at their credit, we're looking at their score and report, but more importantly to us, we really want to know, is this their bank account? Do they open and close accounts? Do they overdraft? Do they, do they write hot checks? Are they authorized to sign up on the bank account, right? And so what kind of history is on it? So in this case, you got checking verified good standing. There's no reason to not approve them. And then you're going to go to, then you'll see the menu of monthly payment options, as you can see here. So if we were financing $4,700 at 15.9%, we could get a payment as low as $114 a month. And so you can either turn the tablet around and show the patient, say, hey, Charlie, you got approved. Choose which option works best for you. If you don't feel comfortable with that, one, we can modify the system to only show certain terms, or you could just say to the patient, hey, Charlie, we got you approved. What kind of payment are you looking for again? Or maybe you point out a payment term that is more within what you want them to kind of agree to, right? Maybe you want to keep them in 36 months or less. You might say, Charlie, we got you approved. Could you afford $164 a month? And I'm either going to tell you, yes, I can, or you know what, that doesn't really work for me. I could really do about $140, right? And you say, great, we got you approved, and it looks like we can do $146 for 42 months. You'll click select next to that option, still sign the contract. And you'll notice here it's very straightforward. You can see that you're going to earn about $1,500 in interest on this loan alone. So if this was a 6-month Smiles case, you're going to walk away with $1,500 in interest by the end of the loan. I mean, how great is that? They sign it electronically, complete it, and then you're done. And so at that point, we take it from there. We're going to bill and collect automatically, pulling the payment from their bank account every month. And we'll turn around and take that payment and directly deposit that money into your checking account on the following Friday. So we make deposits on Fridays. So depending upon when the patient's payment date is, you'll receive the payment the following Friday. And you'll see in your reporting and deposit statements the breakdown of what was principal, what was interest, what our fee was, and what your net payout was. We also provide all the customer service. Again, I cannot stress enough, your team does not get involved. And with all due respect, we don't want them to get involved. This is a very, I would say it's complicated, but there is a significant amount of effort and work that goes into managing the loans and the process that we do and providing the service around it. It is a much bigger deal than one would think. And so as soon as someone misses a payment, let's say we hit their bank account, it comes back insufficient funds, we immediately begin our soft collections process, phone calls, emails, text messages, let them know, hey, your rate's not going up, we're here to help you, get in touch with us. Don't let this be reported to the bureaus and turned over to collections. We can help. And, we're going to do whatever we can in our power to keep them in a good standing. We may have to delay their payments for a couple of months, or air condition went out, or their car broke down, or life happens. We get it. We're here to help them. We're not here to dig them a deeper hole that they can't get out of. Sometimes, most of the time when people face hardship like that, it's typically them telling us that I'm just struggling to make that payment of $200 a month. And typically then we'll just have to what? Stretch out their terms further, lower their payment a little bit to accommodate to their situation. But either way, the longer they pay, the more money you're going to make in interest, right? So, and at the end of the day, again, you just want them to pay. At the end of 90 days, if they don't respond, then we will report them to the credit bureaus. We will turn them over to, ship them to hard collections. We'll continue to follow up for about another 4 or 5 months. And let's just say worst case scenario, after about 8 or 9 months without a response, if they don't make an arrangement, which doesn't happen very often, but if it does, then we will exhaust all efforts. You won't get paid. We're not getting paid. Nobody's getting paid. And at that point, it's just on their credit report. Let's take a look at a case study here. So this is a 6-month Smiles provider, Dr. Peter Thompson. He's been with us since May of 2011. So this was an analysis, kind of an overview of his portfolio, so to speak. So in that time, the last 5.5 years, he's done $1.1 million in treatment. It's almost 6 years now, but he's done $1.1 million in treatment. He's earned over $198,000 in interest. He's had $58,000 in loans or principal balances on loans that went into default. But do you think he really cares? No. Why? Because he earned almost $200,000 in interest. Again, interest offsets risk. I can't tell you how many times I've talked to dental offices over the years or someone in the practice that says, well, what if they don't pay? Well, do you really think that everyone's just not going to pay? Sure, there might be 1 or 2 that may not pay in the future, or a few that may not pay in the future. But at the end of the day, all the people who are paying, you're making interest on. So that's going to help offset the losses for people who may not pay in the future. Plus, this is mostly dentistry you're not going to get to do anyway, right? And he's getting over $16,000 a month in monthly payments. So how would every one of you on this call like to say that you're getting an extra $16,000 in just payments coming in every month, just without even turning a handpiece? You look at his averages in his portfolio, Dr. Thompson originates 2 payment plans per month through Compassionate Finance. So he's doing 2 loans a month. The average loan size is probably around $5,000 to $7,000. His average interest rate is 15% for 42 months. And the average patient payment is around $215 a month. Sorry about that. So if you look at his projections here, and if he continues, if all variables remain constant, he helps 2 more people every month with Compassionate Finance, average rate, average term, average payment, all the same. At the end of every 5 years, he's going to have accumulated another $1 million in revenue at the end of every 5 years. Dr. Thompson has earned over $165,000 more compared to third-party financing, and based upon his portfolio of credit score breakdown, we can make the assumption that over 62% of these patients in his portfolio would not have been approved by an outside lender. Let's take a look at the cost of the